Hello everyone, thank you for joining us on this Wednesday morning and welcome to the Specialist Trading Educational Presentation. Now today I'd like to talk to you about a short-term method with very quick results. This is a great method, relatively new, only a couple of months old actually, but we're getting some great testimonials from members who already purchased this method or are students and learning how to implement the actual rules to this. And I'm going to show you a ton of examples, some that have happened in the last couple of days that really could have turned around your trading results. For example, let's look at this chart. This was in mid to late January coming into February. And someone looking at this chart would say, well, not a lot of data. We're only looking at roughly 5 bars, so there's really no way you can get a clear-cut idea. This is in DAO. But most people would say it's a sideways market and there's nothing really happening. But this actual method would have generated a buy signal right here at the very end of January. And in the next couple of weeks, it rose nearly 80% in value. All right, so this was a very inexpensive stock that you could have really had a really nice profit with, and this was generated by this short-term method. Now, it also works on the downside. All right, let's look at this example in NXPI. Now, this was just recently, this was just going back last week. Someone would looking at this would say, well, okay, we're in a kind of an uptrend. We kind of made a bottom here, and we're now going up higher. So we're in a clear-cut uptrend. Until we break this, I'm going to say this should be a buying opportunity. But this short-term method with the requirements and the short-term tools, some of which I'm going to explain to you today, actually generated a sell signal right here. This was on the 19th, actually a week ago from today. And the stock fell 13 points in 4 days. So you're going to see that this is a really great tool and a really great method if you want to be trading short term, taking these really nice either big moves to the upside or to the downside in relatively short time. That's why this method is perfect if you're an option trader. And you're going to see how easy it is to implement on our platform, the PTS Primo charting platform that actually teaches traders how to trade. So welcome once again to this educational presentation. My name is Stephen Primo, President and Founder of Specialist Trading. If you're new to my webinars, we're a little bit different from other webinars you may have attended in the fact that we are first and foremost an educational company. Our only goal is simply to educate you. Remember, your decisions you make as to how you enter, how you exit, how you place your stops is entirely up to you. We teach you upwards of 21 different areas in which to apply those categories, but ultimately you've got to decide, because I've been trading now for over 4 decades, and if there's only one thing I've learned in my 4 decades of trading is that the only way one becomes consistent is by making their own trading decisions. So the reason why most traders don't do that, the reason why the entire industry is based on you going to a chat room or listening to some guy on TV tell you what to do, or wait for the earnings or some jobless report, is because that's the way we've been trained, and basically you haven't had the sound fundamental education to make your own trading decisions. Well, this is the service we provide. I teamed up with Pro Trader Strategies a little over 10 years ago with one goal in mind, simply to educate traders with all the things I've accumulated in my 43 plus years of trading, so that ultimately you can become a consistent trader as well. So you'll see the attention to detail that we really give to educating you today. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance with this quick short-term method, but please remember, we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples, once again, are strictly for educational purposes only. Now, we have a lot of new faces here today, I know that many of you are following us on Twitter, but if you haven't, please feel free to follow us. Here is our handle. You may want to copy that down. I post different information on a daily basis. In fact, one of our really proprietary tools, which I will be talking about today, really gave an early warning to this downward market that we've been experiencing as of late. In fact, I tweeted about it roughly last Friday that it was giving an early warning signal to the downside. And since then, the market has fallen roughly about 2,000 points. So there's lots of great free educational information on Twitter. Feel free to follow us there, okay? Now remember, once again, if you've come here today thinking that I'm going to tell you what to buy, or is the market going to go lower, is it going to go higher, or what do you think of a certain stock, or what do you think of a certain currency pair, you have come to the wrong place, my friend. That goes entirely against our philosophy as educators. Once again, the only way you can become a consistent trader is by making your own trading decisions. I often tell my students, what is the worst or the number one question you should never ask? That is, what do you think of the market? You should never ask someone what they think of the market, because basically what you're telling them and what you're telling the markets is, I don't have any idea what I'm doing. Think of a brain surgeon in the middle of the operation asking someone, one of the nurses or assistants, what do you think I should do here? Or think of an airline pilot in the middle of flight asking his passengers, what do you think I should do? How should I land this? What's your opinion? All right, you would never expect to hear that from them. But why do you hear that all the time, and why is the entire industry based on that, where you have to go to someone to tell you what to do? That is why it's been estimated, in my opinion, that 80 to 85% of all traders fail. Is because that's not the right way to trade. You should know going in where you're going to enter, where you're going to exit, and where you're going to place your stop, where you're going to move your stop up, how many shares, contracts you should be having. Okay, you should know that in advance, even before you enter the trade. Most people would say, well, I just never been taught that. I always went to a chat room and just did what that guy did. Once again, ask yourself, well, how's that working for you? How's your trading going? Most likely not that well. Sure, you maybe had a couple of good trades, and then you give it all back, right? You have a bad trade, or the market falls out of bed the way it just recently did, and then you give it all back, right? Remember, I tweeted last Friday that there was an early warning coming from one of our tools that's saying the market may be headed to a strong downtrend. You can go to our Twitter page right now and find it from last Friday. So this is the information we teach. You'll never have to come to me and ask me what I think about the market, because what I know, I'll teach you, and you can make your own decisions. Just as you see right here, a good mentor does not trade for you. A good mentor teaches you how to trade. So therefore, my goal is not to trade for you. It's not to give you nightly signals. It's not to tell you what time frame you should be trading or what market. My goal is to teach you how to trade with a specialist edge. You can make your own trading decisions. Now, when I was struggling some 43 years ago on the floor of the Pacific Stock Exchange, that's where I first started trading, I was probably doing the same things many of you in the audience today are doing, looking at earnings reports, listening to so-called gurus, waiting for the volume, or looking at the institutions, and nothing seemed to work, even though I had been taught those are the things that are supposed to work for you. It wasn't until my mentors taught me the specialist edge, which is sound fundamental education, and stressed that I had to make my own decisions, that my trading started to turn around. So this is the same way I teach my students around the world in over 115 countries and in virtually every state in the United States. So that's a little bit about our philosophy and what we believe in and how we really want to educate you. Now, since it's going to be conducted like a class, please ask me as many questions as possible. But once again, I like to take my questions at the very end. So if you have a question, please wait till the very end of today's presentation. It'll probably be in the next 20 to 30 minutes, and then we'll reserve the rest of that time for questions, okay? Now, if you have to leave early, if you're having technical issues, many times if you turn off your computer and log back on again, it will be corrected. A lot of times it's just your own Wi-Fi connection or your internet connection. But if you're still having issues, don't worry. Every one of you will get a link to this recording at the very end of today's class, okay? All right, with that stated, let's begin today's educational presentation, and we're going to be talking about strategy number 10. As I stated earlier, this is a revolutionary new strategy for us because it doesn't use any of the standard format that we usually use for trading. The reason is because we wanted to specifically design it for short-term requirements. This way, you wouldn't have to wait a lot for some kind of confirmation that a signal is being generated. This way, you could find out right off the bat. For example, let's talk about some of the highlights. As we stated, it's entirely new based on short-term requirements. Now, usually, if you're a student of mine or a member of seeing free webinars I've given in the past, we always require that all students use the 50-period moving average to determine whether they are buying or selling. That's why we call it the buy-sell line. But guess what? We're not going to require that in strategy number 10. The way we're going to determine the trend is by using our proprietary tool, the PET-D. And I'll go into that in just a few minutes if you're not familiar with what the PET-D is. Now, strategy number 10 is a combination indicator-based as well as pattern recognition strategy. Now, usually our strategies are either fully based on indicators or they're fully based on a pattern. Now we're combining the two. So here it's entirely different as well. Now, it's designed to trade in continuation with the short-term trend. You see, all the requirements that we're using here are short-term requirements, meaning that we're not looking at something that goes back 2 or 3 months. We're only looking at something that goes back anywhere from 2 or 3 days to 2 or 3 weeks. That's how we determine and how we generate our setups. Now, the beauty of this is that because it's based on short term, you can apply option trading to this. All right. A lot of the other strategies we use require that a bar close at its very or close to its very high before you can even determine whether you're going to enter or not. Now, a lot of times this works unfavorably with option trading because the price of the option goes well up and you have to pay high premiums. The beauty of strategy number 10 is many times a signal will be generated in the opposite direction, or when nothing is happening, when there's a pause and when the premium is very inexpensive. So this is great for option trading. Now we have aggressive and conservative versions. If you're an aggressive trader and want to get in really quickly and don't care about risk, we have a version for that. If you're a conservative trader and want to get the best price possible with the least risk, we also have a version for that. Now, a lot of people say, well, why do I need a short-term strategy? I'm not a short-term trader. Well, let's say you're a swing trader or even an investor. This is a great way to offset your long-term investments. For example, this past week, we've seen a strong downward move in the market. Now, let's say you're a longer-term investor and you're still holding on to all your positions. Well, they've taken a big hit this last week or two, right? You've lost a lot of money because the market's fallen nearly 2,000 points. If you had a short-term method to offset that or kind of hedge when it goes against your long-term investments, you could hedge that loss that you had currently. For example, I'll show you a number of short-term trades you could have taken advantage of that really were well poised to take advantage of this downward swing. All right. Now, with all of our methods, the longer term and the short term, they are based on consistency. Now, I know a lot of you would say, well, that means that they always have winners, right? There must be, 9 winners for every loss. Well, that's not true. That's not what consistency means. Consistency is an awareness that you will have losses. That's what consistency means. But the beauty of a consistent method is that it's able to recoup those losses very quickly. So with a consistent method, you know that there will be some losses, and I'll share with you a couple of examples in today's presentation. But oftentimes, the very next signal is able to recoup that loss. Now, a consistent method is a method that will sustain you. You see, everyone is looking for that, home run method where, you have one trade and you shoot the water and you make $20,000, $30,000 and you're set. That's, those are things that basically are just as high in risk as, most methods. And we don't teach things like that. Now, sure, every once in a while we have these tremendous, tremendous home runs, but that's not what we're looking for. We're looking for a more of a 2-step forward, 1-step back approach. Why? Because that's a consistent method, and that's what will sustain you. You see, I wouldn't be a very good mentor or teacher if I taught you this strategy that had one good trade a year and then gave it all back the remaining time it had signals. I mean, what kind of a teacher would I be if I did that? And if you missed that one good trade, the majority of your trades would all be losses. That's the way most people trade today. They have 1 or 2 good hits, and then the rest are just terrible. A consistent method is a 2-step forward, 1-step back. The beauty of consistency is that rather than having a good year and then giving it all back the next year, a consistent method will have you trading hopefully 10, 20, 30, 40 years down the road. And this is our goal, to have you trading that long, okay? All right, so let's go through the process. Now, I can't share with you all of the rules because that wouldn't be fair to the people. We have many students around the world who are currently trading strategy number 10. A lot of option traders like to trade this. And it wouldn't be fair doing that because it just, I can't give away the rules. But let me share with you the process and show you how simple this is. It's a 3-step process, basically. The first thing is we want to determine the short-term trend. And since we're not using our buy-sell line, how do we determine the short-term trend? Well, now we're going to determine it with our color bar tool. This is the PET D. This is going to tell us the short-term trend. Now, I know most of you are familiar with it. I've given presentations. I believe I gave a presentation last week on the PET D. But for those of you who aren't familiar, the PET D determines, it's the best thing I know of for determining the trend. And someone would say, well, why do we need to know the trend? Well, you'll have a higher level of consistency if you're in sync with the trend. Now, most people know this. It's like trading 101, right? But usually we're always taught things that are a day late or a dollar short. Most people seeing this uptrend in hindsight would most likely have got in somewhere around here. And the minute they got in, this happens. But the PET D is a color bar tool that tells you well in advance. Once you see a series of 3 to 5 green bars, it's telling you well in advance you're in an uptrend. And then once you see a series of 3 to 5 red bars, it's telling you well in advance you're in a downtrend. So in my over 4 decades of trading, the PET-D is the best tool I found for capturing the short-term trend. So this is what we're going to apply for determining the trend. All we need to know is what the color of the setup bar is. That's all we need to know. Now, let's look at this example here in DAO. Remember we showed this to you in the very opening of the presentation? Someone would say, well, how would we know the trend? This is just going sideways. There's no trend here. But once you click on the PET-D on our platform, it automatically changes the colors. And as you can see, even though the last 5 bars, that's all we're looking at, was going sideways, what's the color of the bar? They're either colored green or outlined green. So that's telling you the short-term trend is up. That's all you need to know. Now, let's go to the second part of the process. If you're a buyer, well, a buy signal is generated by identifying a short-term pause or pullback. Now, this is the pattern and the other indicator combined. This is how we determine whether a buy setup has been generated. This usually happens on a 1 to 3 day consolidation in a short-term uptrend. Now, if we're a seller, well, sell signals are generated by identifying a short-term pause or a pullback, okay? This is a 1 to 3 day consolidation in a short-term downtrend. So let me clarify exactly how you would identify this. Now, see, we're going sideways. Now, here is basically the pause. Right now, the other indicator we use, the other proprietary tool, as well as the pattern we're looking for with that indicator, would have generated a buy signal. Even though it appeared the market was pausing, a buy signal was generated right here. Okay? This is how really intense and how sensitive this short-term strategy is. And that's how we would have identified 2 weeks in advance of an 80% rise. Now, looking at this example in XPI that happened this last week, all right? Someone would say, well, Steve, we're in an uptrend. We're going higher. We're having higher highs, higher lows. But if we apply the PET-D, all you do is on our platform, we made it simple for you on our platform, click on the PET-D, and the last 2 bars are red. Now, the PET-D is just telling us that we've changed the short term from an upward trend to a downward trend. Even though this day is higher and we closed higher, it met the qualification. Remember, we're now applying the other indicator along with the pattern and how they work in relationship to one another. And even though it appeared that we were in a short-term pullback going to the upside, it generated a sell signal. And that's how we determined the 13-point fall in the next 4 days. Now remember, we're not predicting that this would fall 13 points. None of our strategies or methods do. Whether they're longer term, intermediate, or short term, we are not a predictive company. We're simply teaching you how to spot these high probability entry points. And then once you do, then you can use our upwards of 21, 22 different ways to enter, to place your stop, to exit, to move your stop unchanged, to track the trade. That's the real art in teaching you how to trade, using all these different variables. And then you decide. There's not one right way to trade. No 2 traders should ever trade alike. That's why we don't have a chat room or a trading room, because that's a crutch. It would turn you into trading the exact same way the person who's monitoring the chat room or the trade room. You say, well, I guess I'm supposed to buy here, I'm supposed to sell here. It doesn't work that way. You're supposed to decide, not someone else. Okay, so let's look at some recent strategy number 10 setups in action, okay? These are fairly recent, within the last 2 months, some within the last couple of weeks. Okay, we're looking at 5 bars of LM, all right? This was in February. This was just a couple of weeks ago. How can we say that there's a trend here? There's absolutely no trend, right? Well, we apply the PET-D, and actually there is. All the bars have been colored or outlined green. So the short-term trend is up. Now we apply the other 2 rules of the strategy, and we see a buy signal was generated here. Okay, so on the 7th, which was about 2 or 3 weeks ago, you could have determined that you wanted to go long, bought the calls, however you wanted to do it. Stock gapped up 10 points roughly within a week later. SYY, okay, maybe it's made a bottom here, maybe we've got some support, but we apply the PET-D and we see that the last bars have been red. Now we apply the other 2 rules of the strategy, and we see that we have a cluster of sell signals. Now we have 1, 2, 3 sell signals. Not much has happened in the last 3 setups, but ultimately it kicked in, and the stock fell 8 points coming into the beginning of February. Here's another example in CINS, or CNS, I should say. We have kind of a strong upward move here, kind of a steady upward move, I should say. And it's confirmed by the PET-D. The PET-D is in a short-term upward move as well, but it looks like it's going lower. In fact, we have a bearish engulfing pattern. So most likely we don't want to buy anything, right? Well, not according to our short-term strategy number 10, because it generated a buy signal right here. Remember, you would have thought that was a bearish engulfing pattern, but we don't concern ourselves with that. We're only looking at what the market is telling us. And the market's saying that it wants to go higher. This was on the 21st, which was on Friday, 10 points. All right, even though the market's been going lower, you could have still made 10 points trading CNS last week coming into Monday. Let's look at SIT. Now, this was in January coming into the first week of February. Looks like we got some support here, right? Not really, because all the bars are red. Now, how can we have support if the short-term trend is down? We don't want to go against the current. We don't want to swim upstream. If the short-term is down, we're going to be a buyer. If the short-term is, a seller. If the short-term is up, we'll be a buyer. But in this case, all the bars are red. So if we add the other two remaining rules, we see that we have a cluster of 3 sell signals right here. So why on earth will we ever think that there's support, or some Fibonacci support, or some Elliott wave support, or maybe some institutional support? The market, through the PET-D, its translator, is saying it wants to go lower. So we could have taken advantage of these 3 sell signals and 9 points coming into last week. Now let's look at this example in TGT, okay? Are we kind of bottoming out here? Looks like we've hit a bottom. There's a doji that happens at the bottom of a trend. We're going to go higher. But what color is the PET-D? The PET-D is telling us, no, the short-term trend is down. Why would you think it's going to go higher if the market's telling you it wants to go lower? So we're going to look for sell setups. We add the other 2 rules, and we see we have 2 right here. The doji, where you think we were bottoming, is actually a sell signal. And so is the next one. Stock fell 10 points coming into the end of last year. All right, let's look at this example in EMPH. This was in February. This was just last week. All right, once again, we're just basically going sideways, not much of a market. When we apply the PET-D, all the bars are green. All right, let's add the other 2 requirements, and we see we have another cluster of 3 buy signals. So you could have bought the calls, you could have bought the stock, it makes no difference, but the stock gapped up 18 points the next day. You see, this is why a lot of our students like to trade options with this, because since the requirements are based on short term, many times you have a really quick pop to the upside or downside depending on which type of signal you get. Now, this was also just last week. Here's another example in SIX. Are we making some major support here? Looks like all the institutions are buying, so I want to be a buyer too, right? I mean, we're always taught you never want to go against the big money, and the institutions are always right, all right? Well, I traded with the institutions 40 years ago. Trust me, they weren't always right. In fact, they had some of the lowest levels of consistency with people I've ever traded with. I used to enter the orders for the institutions in my book because I was making markets in about 60 stocks, and they had tremendous amount of losses. So I would never trade based off the institutions. All right. The only difference is they had big bucks. They could continue buying lower and lower as the stock went lower. Remember, the institutions were, terribly wrong during most of the crashes we've seen. Okay, so is this support? What is the market telling us? Not some institution, not some Fibonacci level. What is the market telling us? Well, all we have to do is apply the PET-D, click it on our platform, and it's saying that all the bars are red. So, I'm not going to listen to someone or something else. I'm going to listen to the market. The market's telling me it wants to go lower. The short-term trend is lower. Now all I have to do is apply the other 2 rules, which we teach you in the course. This is not a black box. In fact, none of our courses are black box. You know the exact rules to all of them and why a signal is being generated or why one is not. But you would have seen here that 2 setups were generated. You could have bought the puts and the stock gapped down. Now, what happened to the major support? What happened to the institutions? And someone once again could say, well, how did you know that that was going to gap down? We don't. There's no way we can ever predict what something is going to do. We're just following the market. Our next example is in BIDU. This was coming into January of this year. All the bars are green, even though the last 3 or so days have closed lower. The requirements generated a buy signal right here at the end of December. And look, we had a really nice jump up here, 10 or 13 points. You could have gotten out, but then look what happened. The very next day, the stock closed lower. So is that a signal to get out of the market? Well, not really, because guess what? Strategy number 10 generated another signal on that short little sell-off. Why? Because the bar is green. Even though we closed lower, the bar is green, and it met the requirements. So you could have gotten back in if you were lucky enough to get out here and got in a lower price, or if you stayed long the entire time. This was a sign that most likely was going higher, and the stock eventually went up 20 points coming into mid-January. Now, let's look at this example in SLAB slab, all right? Only looking at 3 bars. This is what we mean by consistency, okay? We apply the pet D, and we see that all these bars are green. Okay, so what's that say? It's telling us that the short-term trend is up. That's what the market wants to do for right now. Now, the market is fickle. The market can change its mind anytime. But right now, at this moment, since the pet D is based almost on a tick-by-tick basis, and it's determining and translating what the market wants to do, it's telling you it wants to go higher. Now, we apply the requirements, and a signal was generated. So let's say you bought the calls, or let's say you bought the stock, and then look what happens. The next 2 days, it kind of goes up a little bit and then falters and then closes lower. Most likely, if you used one of our standard stops, you would have either broken even or you would have lost. Let's say you would have lost a total of 4 points, all right? Now, most students at this time say, this stuff doesn't work. I'm not going to trade this anymore. See, my first trade was a loss. This is what we mean by consistency. You can't just, judge a strategy based off 1 or 2 losses. You have to continue to paper trade for a while to see how it performs. Now, if you were actually trading this, we see here that a day after you got stopped out, the market went higher. You see how this is an upward day here. But what is the outline color of it? It's red. So this is a little up day in a downtrending market. Now, you add the other rules to this. Remember, the setups are based on a 1 to 3 day either bounce or a pause. So let's see if this bounce or pause is valid. And yes, it is. It's a sell signal. So rather than sulk on the first trade you had that lost 4 points, get back in. Why? Because many times you can be able to make it back on the next trade. Now, the next trade generated potentially 20 points you could have taken advantage of, depending on where you wanted to get out. So you could have made back that 4 points and maybe a little bit more. All right, let's look at SPICE, SPCE. This has been a big stock in the news lately. A lot of people are buying this. They're all excited about it. Well, it's funny how it got really hot after it started going up. But if we look at the beginning of February, we already knew that this was in a short-term uptrend, and we already knew using strategy number 10 that when the stock was going sideways, a buy signal was generated. This was on the 6th, about 3 or 4 weeks ago. All you had to do was buy some calls or buy the actual stock then, and where everyone else decided to get in here, you were already in the stock weeks earlier prior to a 20-point potential gain. As we look at WWE, it looks like it's kind of bottoming here. It made a little V bottom. This is a very classic way to tell you that you've hit a bottom, but that's traditional wisdom. And if there's one thing I've learned in 43 years, traditional wisdom does not work. Trust me, I tried to trade it my first 2 or 3 years of trading myself some 43 years ago, and trading volume, traditional patterns, looking at support and resistance, listening to economic indicators, earnings. That's all traditional ways of trading. It didn't work. There was no consistency. It wasn't until my mentors taught me to only focus on one thing, the chart in front of me, and what it was telling me through a few special tools and a few simple indicators and a few simple patterns, that I was able to become consistent. So listening to this, traditional wisdom is not what we're listening to. We're listening to what the market is telling us. And if we apply the market translator, the PET D, it's telling us that the short-term trend is still down. Even though the last 3 days have closed higher, they're up days, this is just a 1 to 3 day bounce. Remember, that was one of the requirements in our process. Look for that 1 to 3 day bounce or pause. So if we apply the actual requirements, we see that we had 2 sell signals. Rather than doing what everyone else was, saying, well, this looks like a bottom was reached, we're selling into this little bounce here prior to a 20-point drop in the next week. Okay? You see how simple it is when you don't rely on outdated rules and requirements that really show no levels of consistency. All right, example on XLRN. Once again, looks like we're going sideways here in January, but all the bars are green. We applied the requirement process and see we have a buy signal generated on the 15th of January, and then nothing really much happens. And then someone would say, well, the bars turned red, Steve. Yes, they did turn red. So it's telling us that on the short term, the market wants to go lower. Does this mean to get out of your position? Well, if you are a very conservative trader, you could have said, yes, I'm getting out. And that's okay. That's the way you like to trade. That's fine. You would have taken a small loss, and that's okay. But we also have an aggressive version. The aggressive version would have kept you in, and look what happened. You could have potentially captured 40 points to the upside. Now, this was more aggressive way of trading. If we look at this example in UI, this is very standard. All of the bars are red. They didn't change. We have a sell setup based on the requirements, and the stock gapped down 32 points February 7th, okay? You think you could have done well buying some puts in that particular example. Here's an example in NVDA, MVDA. This was in mid-February, once again. Looks like we're going higher to a little sideways, but all the bars are green. We look for that little pause requirement to see if it met the requirement between the indicator and the relationship with the pattern, and yes, it did. There's a buy signal generated on the 7th of February a few weeks ago, and we had a nice rise. You could have exited there using one of our many exits that we teach you, or you could have stayed in because another buy signal was generated. And you could have purchased more if you want. You could have doubled up. It's up to you. And the stock eventually went up 63 points coming into last week, okay? And lastly, here's an example in STMP. Most traders would say, well, this is a sideways market, Steve. I'm not going to do anything. We're kind of in a range here, and it's kind of a whipsaw. And actually, if I want to day trade this, I'll sell when it gets up to here. When it gets down here, I'll buy, because we're just basically doing nothing. We're treading water. That's the way conventional wisdom tells you to trade. But if we listen to the market, rather than using the outdated ways of analyzing, we see that the market was actually red here, was in a downtrend, and then the last three bars have turned green. Now let's apply the two other rules, and we see here that a buy signal was generated February 7th, okay, 2-3 weeks ago. Had you taken advantage of that, buying some calls, 105-point gain in less than 2 weeks. Now, potentially you could have captured that. That was coming into the 21st. That was coming into Friday last week, okay? You think you could have done well with that, buying some options? That's why we say many of our students like to trade options with this. Now, what if you're a weekly time frame trader? What if you like to trade other markets, okay? It's okay. You can also apply this to higher time frames. For example, here's a weekly chart of the QQQs, the ETF that represents the NASDAQ index, all right? Looks like we hit a short-term top here. This was in mid-January. Why? We hit a top, we hit a doji, and then we're going lower, okay? But that's conventional wisdom. We don't look at that. We listen to the market. We apply the Petit translator to tell us what the market wants to do. And all these bars are green. Even this top here was green, and even the sell-off the next week was green. Now we apply the requirements we share with you, the indicator as well as the pattern, and we have a buy signal here on the 20th of January and another one on the 27th. Now, if you stayed in both of these, you had a nice 28-point gain coming into the first or second week of February, okay? Now that represented thousands of points in the market. How about an example here in gold? All right, anyone a gold trader? Same thing, kind of looks like we made a top or going sideways. This was coming into the first week in February. We have a huge down day here, or down week, I should say. But we apply the PET-D, and the PET-D says it doesn't matter that we were down. The trend on the short term is still up. So that was actually a buying opportunity because a signal was generated on the 3rd of February. And look at the market in gold, okay? Now let's look at a weekly chart of PSA. So, all right, a lot of traders like to swing trade on stocks. So if we have a weekly chart here, we see a sell signal was generated. This was in last year in PSA, and the stock fell 45 points coming into this year, okay? Or how about this example in Netflix? This was on the 27th of January, just about a month ago. It generated a buy signal on a weekly time frame, 50 points coming into this past week in February, okay? All right, so let's recap and talk about this great strategy, this fairly new strategy we have. Remember, we apply the PET-D color bar tool first to determine the short-term trend. Once we know the trend, Buy signals are generated by identifying a short-term pause or a pullback. This is usually a 1 to 3 day consolidation in the short-term uptrend. Now, sell signals are generated by identifying a short-term pause or pullback as well, but this is a 1 to 3 day consolidation in a short-term downtrend. Extremely simple. We're going to share with you all the rules, all the ways to enter, all the ways to exit within the course. Remember, this is not a black box strategy. So ask yourself, do you think this new strategy can help your trading in 2020? Remember, these signals we just shared with you, some happened last week. Some took advantage of this tremendous downswing we've had. Now, if there's a little bounce or a pause in the next couple of days in trading, don't you think there's going to be some more sell signals generated? So this is really going to help your trading regardless if the market is going straight up the way it was last year, or perhaps if we decide to go straight down, you'll have a short-term method to trade that as well. How about if you're a long-term investor? What if you want to invest it's still in your portfolio, but you want to hedge against any losses? This is a great strategy to have in your back pocket to hedge against your long-term investments. All right, we have a great attendee offer for all the people attending today, for all the people listening in today's webinar. We're going to offer you a great discount on strategy number 10. All right, this is our short-term trend trader. Okay, you're going to get the entirely new strategy, which applies the PET-D for short-term trend. You're going to get the combo indicator-based method with all of the rules, all of the entries, exits, and stop placements. Okay, remember, you can apply this to option trading if you'd like. You're also going to get our PTS Primo charting platform. This is the educational platform that teaches you how to trade. Now, normally, we'd give you 12 months for a special price close to $1,000 or so. Guess what? We're throwing in a full year of our platform entirely free. You're getting that entirely free, so you can use this process by applying the PET-D with the strategy number 10. But we're not going to just stop there. There's so many more things included along with the platform. For example, you're getting strategy 10, the PET-D directional tool, our strength of trend feature, which can tell you oftentimes when a trend is running out of steam. One of the best things here you're getting is our signal scanner. All right. Our signal scanner is great because you can scan on a nightly basis for strategy number 10 setups. For example, it's this simple. All you have to do is click on the scan. You'll see a series of green bars for buy signals, red bars for sell signals. Now, last week, or I should say a couple of weeks ago, a sell signal was generated in CSOD. Okay, as we see here, it's colored red by the PET-D, and it's a valid sell signal. You could have taken advantage of this, buying the puts, coming into, I believe this was yesterday. The stock had fallen 20 points. Now, this is just something that happened within the last couple of weeks. How about something that happened within the last 3 or 4 days? Okay, this actually happened at the end of last week. We had a sell signal that you could have scanned for in KLAC. All right, we had a 2-day bounce here. Here's the sell signal. You could have bought the puts, and the stock fell 24 points coming into yesterday. Okay, so I know a lot of times you'll go to webinars and you'll see some great setups, some great signals, some great examples, and then you'll look at the date and you go, wow, that happened 6 months ago, though. How did I know that works now? We always try to share with you signals that have been generated recently to show you that this really works. This is something that is very valid. I'm not going to tell you that every signal works. I've showed you examples where there were losses, but all of our methods are extremely consistent. Now, on top of this, you're going to get the scanners. You can scan for these signals, but you're also going to get another great perk, and that is our auto-generated exit levels. Now, this is just one of the ways to exit. And remember, I told you I have upwards of 7 different exit techniques. This is just one of the techniques, but we've automated it on our platform. So whenever you get a signal, for example, this one in GS, Goldman Sachs, as you can see, a sell signal was generated on the 19th. This was last Wednesday to go short, GS. Now, here's how simple it is. If you decided to take this, even before you entered into the trade, you could have double-clicked on the arrow, and it automatically will show you the exit levels. So you could, even before taking the trade, you could decide for yourself, well, here's exit number 1, what I want to get out here, what I want to get out at exit 2 or exit 3, and look what happened this last week. This is a chart coming into today. This was actually today, the 26th. So this just shows you how simple it is to trade using our platform. The beauty of this is it all comes included with the platform and strategy number 10 and the PET-D, okay? So let's break down this great offer we have for you. Normally, our early launch special rate would cost close to $5,000. We're going to discount for you today with the Pet D. Now, if you don't have the Pet D, so if you're getting short-term strategy 10 with the Pet D, we're going to discount it to $44.95. This is still extremely discounted because normally both of these things together would cost you close to $7,000 or $8,000. So you're getting it for $44.95. Now, let's say you have the Pet D. Let's say you already are a member of our Pet D course. Well, we're going to discount that from $34.95 down to $29.95. Now, the beauty of this is we're not going to stop here with the discounts. Let's say you can't come up with the amount, but you really want to become a member of our course. For a limited time, we will have payment plans. So let's say for $44.95, you put down a small deposit, you'll still be up and running as early as today. So this is all a great offer for you to get involved in this course with 12 months of the platform. So take advantage of this entirely new strategy. Start 2020 in the right direction. Become a student of mine. And one last thing I didn't mention, once you become a course member, you'll also get my private email address. You can contact me with questions whenever you'd like. So this is a great way to contact me. This is a great way to stay in touch with your mentor. And this is a great way to have your questions answered ASAP. So here's how to take advantage of this great offer. Contact Pro Trader Strategies. I would highly suggest contacting them at 310-598-6677 because let's say you can't come up with $44.95 or $29.95. That's okay. They, with a small deposit, will still be able to work with you and you can still be up and running and become a student of mine. So you don't have to come up with that one lump sum. You can still come up with a small deposit. Now, the link you see at the bottom is the link that will take you to the online sign-up page and the information page. But it's not a live link. A live link has just now been posted on our chat box, on the GoToWebinar chat box, okay? Now, I stated we'll reserve the last 10 or 15 minutes for any questions. So if you have any questions, just open up your question and answer box, type in whatever you want, and I will answer it to the best of my ability. I see we have a question here. Steve, can we use this for intraday trading? You know, personally, this is a suggestion. I have tried it with intraday trading. It works much better with daily bars and higher. Why? I think it's because of the short-term requirements involved. Once you start going into hourly and 15-minute charts and tick charts, it kind of muddies it up a little bit. There's too much noise, and you may get, you know, these signals that are kind of whipsawing you, and you may get too many signals, and they're really not with any profit potential. So I personally would use this for daily bars and higher, okay? That's why I share with you some weekly examples as well. Someone's saying, what about other markets? Can I use this with, say I use this on a daily bar with futures or with the currency pair? Yes, you can. You can use it with currency pairs and with futures, but once again, I would use it with daily bars and higher. Okay, those are good questions. So you can use it just about in any market. The only restriction is this is because of the requirements. It's not so conducive to really intraday trading. You want to use it for daily bars and higher. Okay. Steve, what if I enter my orders on another platform like TradeStation? That's fine. I use another platform to enter my orders, but I use the PTS Primo charting platform to help me generate my signals and to help me look at setups using all of the different tools and features that are available. Now, here's one thing that Pro Trader Strategies and myself are extremely proud of. The majority of tools and things you'll find, such as the scanner, such as the exit points, such as the other features, the buy-sell line, such as the Pet D, such as the strength of trend tool, you won't find on any other platform. These are things that I was taught to by my mentors and that I've taken from the floor, and I've never found anywhere else. So what a lot of students of ours have done is they use their current platform to enter orders or to look at some of the charts, but they use our platform as an educational tool, which it is, to help define how they want to trade and what they want to look for. And then they just, once they want to enter, they just use the other platform to enter, okay? So, I would say the majority of traders trade that way. I use two platforms, this one and my entry platform. So there's nothing wrong with trading that way at all, okay? Good questions. Okay, I see there are no other questions. Unless we get any more, I just want to say, remember, I would highly suggest that you contact Pro Trader Strategies. And remember, there's no obligation. Even if you're not sure that you want to do this at this time, don't worry. They would be happy to answer your question on how much you need for a payment plan. when you could get started and things of that nature. They're in charge of all the discounts and of all of the tech support. So they would be the one to talk to in terms of that. In terms of trading and teaching the strategies, I'm the one to contact. But in terms of the tech support and the actual platform, they would be the one in terms of discounts and being able to use it. So there's no obligation. Contact Pro Trader Strategies. I would call them directly. Right now, there are trading consultants manning the phones. They can answer your questions over the phone at 310-598-6677. Okay? Okay, as we close here, remember, we will send each and every one of you a link to this recording today, but please remember that this offer is only good for a limited time. Next week, on my next free webinar, next Wednesday, I will have an entirely different webinar with possibly talking about just educating you about something else. And someone would say, well, I saw the webinar last week. I want to take advantage of that $44.95 offer. That may go all the way back up to $7,000 or $8,000. So you don't want to sit on this too long. If you're really serious about taking your trading to the next level, watch the video, watch it a couple of times, but make your decision quickly, because then it will most likely will double in price, and we'll have another feature we'll be talking about, okay? Okay, as we take one last look at our disclaimer here, I just want to say thank you for taking time out of your Wednesday to join us today. I hope you learned a little bit about how we teach and how we trade, but most especially, I look forward to all of you becoming students of mine in the strategy number 10 short-term trending class, okay? I want to thank you so much for attending. I look forward to seeing you all in our strategy number 10 class. Thank you so much. I'll see you next time. Bye-bye.